Hey everybody, it's Pete Renzulli. Welcome to Stock Trading Pro today. We have a ton of stuff to talk about in the stock market today. We're going to do a little bit of a deep dive into sector rotation. We're also going to talk about whether or not the massive bullish rally that we saw in tech stocks, is that over? Obviously, we're going to talk about Jerome Powell today and whether or not we're going to see hawkish or dovish type conversation. Inflation is obviously going to be what everybody's going to be glued to. So here's something I normally never do. Is there going to be a stock market crash or rally at exactly 10 o'clock today when Jerome Powell starts to speak? It's going to be really interesting. So especially if you're on the active trading side of things, where maybe you're day trading stocks or watching your swing trades, you need to know Jerome Powell speaking today. We got a ton of stuff on the sheet today. We're actually going to talk about reviewing something from our coaching call last night, which again, we always have 2 coaching calls per week. Last night, we had this really good spirited conversation about winning trades, losing trades. Stop complaining about the losing trades because they're a part of business. That's not the real problem if you're not making enough money. The real problem is, are you making enough on your winning trades? It's actually your winning trades that are holding you back. When you buy stocks, you need to get paid when everything's lining up. We had a little pocket of opportunity yesterday in the community where everything just lined up. First 90 minutes of the day was just absolutely glorious. Some stocks just absolutely exploded. So we're going to talk about that today. We're going to talk about, should you get uncomfortable sometimes, and when to do it and how to do it. I got a big list here. I want to make sure I go over everything. We're going to talk about hot sectors. We're going to break down sector rotation. We're going to dive a little bit into basic materials sector. We've been talking about that for a while. Energy stocks are still pretty strong, but they're a little bit beyond what we call the optimal entry. So really not setting up new swing trades in those stocks. We want to keep an eye on crude oil. Crude oil, if you remember last week, and I'm going to point this out on the chart again, crude oil actually pushed down, but then the second push down did not go as far. And now we're watching to see if it can get back above 95, which is a big level. We're also going to talk about some stocks that had earnings and a stock that had a big deal with Amazon. Peloton, forget it. I was reading a whole bunch of stuff about them last night. They're going to a freemium model and a software model. I don't know if you can have a software model when your bike costs $2,000. Don't even start. We're also going to talk about NVIDIA. We're also going to break down a really interesting setup in crypto mining stocks today. There's 2 that we trade pretty much all the time. I don't know if Aldo is still watching us anymore, but Aldo actually gave us this list of stocks. And then we're going to finish up with something that is super interesting, that is a really easy stock scan to run every day. And it's one that you absolutely need to run every day because it will tell you when the smart money is doing something and you need to step up. And that's a big clue. Remember, stocks go up and down because somebody with really deep pockets decided to do something. And now we want to follow and piggyback on what they're doing. We call that order flow stacking, but a really big day when you're searching for volume can ignite something or literally cause the end of a move, and you really need to be on top of that. So, my gosh, welcome to Stock Trading Pro. We have a ton of stuff to talk about today. It's Friday. Thank God it's Friday. Stick around. I'll be back in just 1 second. Okay, so I want to say thank you so much for joining me. It's just a privilege to be here with you today. If I could ask you for a favor, if I do a good job today, if you could please do me a favor, give me a thumbs up and hit that like button, only if we've earned it. I want to make sure I earned it today. So we're actually going to start out with the big thing today, which is obviously Jerome Powell, right? Jerome Powell's speech today, economic outlook, Jackson. This is really the big thing. It's inflation and what can they do about inflation. That's really what it comes down to right now. You can see it's here Friday at 10 a.m. So if you're watching the market, you absolutely need to be on top of this right now. So the really big thing to come out of this right now, what we're all going to be thinking about is, we know where inflation is, not in a good spot. Again, oil prices came down, but that's starting to go up again a little bit. Whether or not the news that came out of Washington, where they're all of a sudden now redefining what it means to be in a recession, we can all feel it. Go to the deli, go buy lunch, go buy breakfast, go wherever you want to go. Prices have not come down, and they're still pretty ugly when you're paying twice as much for what you did. So what are their choices about inflation? Raising interest rates, which they've been doing. Now they're at a level where the market, again, just for some context here, the market had this absolutely crazy bullish run for a period of about 4 or 5 weeks. We can actually take a look at this on the weekly chart. So right over here is where you heard all of that conversation, all of that chatter. probably saw a ton of things in the stock market about Michael Burry and predicting another 50% move to the downside. All you heard was value investors everywhere. Couldn't wait to scoop up some stuff that crashed, and it didn't happen. As a matter of fact, the exact opposite happened, and we had this vicious, let's call it a 5 or 6 week rally to the upside. But here's the thing, and I'm not trying to throw cold water on the market. We all want the market to go up. It's just everybody's happier when the market's going up. But we have to be realistic, and we have to understand when and if the tape changes. So remember that the core things that I'm hopefully getting across to you through all of these live streams that we're doing is there's only two things that you need to be focused on in the market. There's so many billions of things that could confuse you. Is order flow obvious? Order flow is obvious when you can clearly look at a stock and or look at the market and determine, yes, buyers are in control or sellers are in control. That's step number one. Step number two is really where the majority of people have challenges is if it's obvious, how do I know if it's still valid? If it's obvious, how do I know when it changed? So I want to give you a little bit of a trading strategy here, maybe it's a trading tactic, is when you are looking for a change of order flow in the market, use the weekly charts. I can't express this strongly enough. So we're actually going to take a look at that and show you exactly what I mean here. You can see that we had this big push to the downside, but we did not follow through on the weekly charts. And what's interesting here, and even if I go over to the daily charts, we can look at a little bit more of the minutia. So when stocks trade, right, they should push down and pause and then push down again. So when it's a healthy move that you can feel conviction in, this move to the downside right here should have taken out this move down here, and it didn't. So then we had one more try. We actually rallied again, pushed down, and we held that support. Right there in that moment on July 14th is when the buyers stepped in, and we said, no, Michael Burry, we're not going to start crashing and head down. And you can see what ended up happening there. But if you take a look at what's going on now, and we're reading the tape on the weekly chart, this week right here is what we call a bearish U-turn. So a U-turn candlestick is not a change of order flow, it's a change of momentum. What happens after that is how we define the whole picture has changed. So a reversal is a warning sign. The next candle does the same thing and validates that warning sign. That's when we have to sit up in our seats and say, okay, something changed. Now we need to make decisions on either open positions or look for different stocks to trade. So in that big run to the upside, we've been talking about Apple specifically. So if we keep an eye on the QQQ, we could see what the Qs did over that period of time, but more specifically Apple, which really kind of just lifted the entire market on its back. Now, growth stocks and tech stocks have a hard time going up when interest rates continue to go up. And right now they're borrowing money. Now, Apple's not affected by that, but number one company in the world, probably. I think anybody would have a hard time arguing with that. They're not really affected by we need to borrow money, but most of the other tech stocks are. As interest rates go up, they're going to be affected, which is going to decrease their margins. So as you're looking at some of the earnings reports that are coming out now, and don't even get me started on NVIDIA. We're going to talk about NVIDIA in a second. $10 move off the lows yesterday after lowered guidance, and then earnings come out and the stock trades lower and just rockets higher for $10. We were watching it in the community yesterday, actively trading it, actively calling it out, but really not expecting it to have that monstrous of a move. So it's going to be interesting to see what NVIDIA does today. The point that I want to make here is tech stocks, based on the way I'm reading the tape right now, have cooled off a little bit. And now with Jerome Powell and the Fed having this conversation again, they have no choice but to be raising and continuing to raise interest rates. It's really just a question of how fast. They're talking about they want to get inflation down to 2%. And it's still up over 8%. That's a big move. And they've already raised 75 basis points the last two meetings, and now they've spooked the market. The market rallied. They have no choice if they want to get it down to continue raising. Now, should that concern you? Well, concern is a strong word. I'd rather see you prepared than afraid. And actually, there was something that was brought up in our community today, and I actually want to share it with you from Gabe. I want to just bring this in because I think it's kind of important, and it means a lot. Because you can see over here, Gabe, from our coaching call last night, what's probably going to happen next and what I'm definitely going to do. All right. That's a big one, Gabe. You're ready to act instead of reacting and removes the stress of thinking we need to predict. I just can't express this strongly enough. When you know what you plan to do, trading is 10 times less stressful and, quite frankly, easier because now you're preserving your capital and then you understand when to size up, which that's a big thing I want to get into right now. But first, I want to talk about some hot stocks, and then we're going to make our way over into last night's coaching session and give you some really big insights into some of the stuff that we talked about last night, because these things could be life-changing if you listen to them. And I'm just going to give you a little bit of a preview on that, because right now, one of the biggest challenges that people have is believing or not really being able to make the distinction between when something's a fantastic idea and an okay idea. It is critical that you understand this is an A-plus idea, and I'm getting it at the optimal entry, and there's a lot of room to go, versus this idea is okay. The stock is pretty good. Maybe it's gone a little too far. I could take the trade. Understanding the difference between the two is when you put more into the trade and get uncomfortable versus you just trading for cash flow and kind of getting out as soon as it starts to slow down. Knowing the difference between the two is what we're going to talk about today. It's something that we discussed on last night's coaching session. So first, we want to do, as we do every day, we want to take a deeper dive into sector rotation. And what's kind of interesting here is you can see how strong we were over the month coming into Tuesday. You can see that we started to see some really nasty bearish price action. This was coming off of last Friday and last Monday. Monday was really, really bad. Started to see a little bit of a recovery. And if you remember yesterday, heading into Thursday, we actually made a very big statement. And I want to show this on the charts. And this is, again, a part of being prepared. We had that nasty 2 days of selling. We had Friday and Monday, big down day. And then we kind of went sideways for a couple of days. So if you remember yesterday, we actually pointed out that this is when the bulls really need to step up. Now, they stepped up. And if you happen to be on the short-term side of things, and we'll just pull that up for a second, and we'll take a look at the SPY, and we're going to dive a little bit deeper. And I want to point out what we're talking about now. Remember the quote that I just gave you. It's more important for us to know what's probably going to happen and what we definitely are going to do. So that means we have to trade from a probability mindset, what's probably going to happen next, which means you need to learn order flow stacking because that's where the probabilities happen. But more importantly, no matter what happens, I know what I'm going to do. So here's what we looked at yesterday. We broke it down yesterday, and coming into the day, this is what we were looking at. And we said, okay, big gap down, and a couple of days sideways in the context of this big move to the upside. So what we can actually do now is we can start to map out what do we think about is going to happen in the market next based on this move. So what we have right now is we finally broke this move to the downside right there. And we said, all right, the bulls have to defend this big move to the upside. So going into yesterday, we said we need the buyers to step up. If they do, and if the market internals, the VIX, the ticks, and the advanced decline line, and our group of sectors, super easy to set up. We teach you how to do this from start to finish. Super easy to set up. You're like, okay, if we see that, then buyers are back, and we could feel comfortable bidding for stock and looking for those stocks to take off and make some money. We got it yesterday. And let's kind of zoom in. Now, again, we talked about that pre-market. It's not forecasting. It's if this happens, then we plan to do this. So this all comes from this. This comes from having the rotation, seeing where it's going, where there was a ton of selling, less selling, and then heading into Thursday, there was no big negative numbers. So what we were looking for is this buying pressure to kick back in, and it did. So that's what we ended up getting. And yesterday was awesome. Now, what was the one downside to yesterday? Remember what we talked about, and it was a part of the sheet that I want to walk you through today. Now, this is where you want to take a screenshot because this is important. I want to give you behind the scenes of some of the stuff that we do now heading into Friday, all right? So heading into Friday, we have our research document. We already know that the selling pressure is weakening, and we actually had some good buying yesterday. So we're starting to see some signs of life. We already just talked about energy stocks. They've cooled off a little bit. They're beyond the optimal entry. You can see technology worked its way all the way down to the bottom. Now, this is another thing I want to get across here as well. Too many people think that you need to predict or forecast what's going to happen next in order to make money from the stock market. Throw that garbage out the window. It is infinitely easier to look at where the smart money is pushing stocks or not pushing them anymore and just follow them, which is why sector rotation and order flow has to be at the top of your list of things to learn in the market. Because if you're already in the right stocks, then it's just a question of learning how to enter trades better and how to hold those good trades longer. So I'm walking you through this now, and you can actually see when we break this down, you can see where technology was starting out towards the bottom, again, towards the bottom. So despite the fact that we had this giant big move to the upside in tech, we are now watching it and tracking it get weaker from day to day and week to week. So that means now we're going to start focusing here, which we've discussed hot stocks in basic materials. Now, we've been talking about this pretty much every day. So we're going to break down basic material stocks and find some ideas that I want to go through. Now, what I want to walk you through right now is the process of, and this is a big difference as well, the process of whether or not something meets the criteria versus it's a trade. So like you could run scans and alerts and all those kind of things. Just because a stock meets the alert criteria does not mean that it's a good trade. You still have to determine what are the odds of it following through and what is the right risk for the profit potential. And everybody knows that as risk reward. So there's two parts of the trade, and please write this down. It's really, really important. First is the probability of it following through, okay? And that's what we call stacking the order flow. The more of the order flow that you can stack, the more obvious it is and the longer it is that smart money has been buying that stock. And again, we could take a look at Apple as an example here. It's probably the poster child for it right now. How many weeks in a row was the smart money paying higher prices? And then when did they stop doing that? That's what we're looking for. So now we're going to take a look at some basic material stocks that have order flow or are breaking out, creating new order flow, and whether or not they're near optimal entries. Okay, so we're going to do that. And then we're going to hop over into looking at the story that we have today that was published on CNBC about Bitcoin mining stocks and whether or not Bitcoin mining stocks and what's known as hash rate, I believe, and whether or not that hash rate is a precursor to Bitcoin having a big move to the upside. So I trade Bitcoin mining stocks. I'm not talking about trading the digital currency. I'm specifically talking about mining stocks. And actually, Chad here talking about HUT. So HUT is actually one of them besides the other two that we're going to discuss here today. But first, let's go back into the rotation. So within the rotation here, we're going to be paying attention to basic material stocks. So now this is where we separate ourselves from just looking for ideas versus looking to make money. So if we start to work our way through basic materials, we're going to go through the groups. So you can now see that there is smart money actually doing something in steel stocks. So we start out the bigger part of the group, which is the sector, and then breaking that down. So we can actually take this a little bit further. Let's go over to FinViz. I just really want to give everybody a bigger picture view of this because it's actually pretty important. So if we go over to our basic template and then we go over here to basic materials, this is really what's important. So you can see out of basic materials, let's actually lower this a little bit just to give a little bit wider picture of the stocks that are in basic materials, right? That's the first part. But what's interesting is over here. And I want to zoom this in because this is a very important part of the stock market that'll make it easier for you. This is the major sector. Then within that sector, there's different groups of stocks. So the first stock that we actually pulled up over here, STLD, if we take a look at that group, which is here, you'll start to see those are the stocks in that group. So it's very different from first with the stock market power pyramid, where are the three major indices obvious: NASDAQ's, S&P 500, and the Dow Jones Industrial Average. Then you go one layer above that. Now, what we're doing, and hopefully you feel the same way because I get really excited about this, we're going on a treasure hunt every day. We don't need to forecast. We don't need to predict. The treasure hunt that we're doing is saying, okay, let's put the first layer of that pyramid. What is the market doing? Yesterday, the market had a big day and closed really strong. Go one level up. Which sectors followed what the market did? So now we're looking to add two layers to that big foundation of the three majors. Now we go one layer above. What sectors are doing the same thing? Then above the sectors are the groups of stocks within that sector. So that's what I just showed you here when we looked at basic materials and all of the other groups within that. Then the last part of that, once we find the market, the sectors, and then the groups that are trading well, then we find the individual stocks that still have valid risk reward and are obvious. So we know basic materials now floated to the top of the sector rotation sheet. So those are the hottest stocks that we're looking for right now. The last part of the trade is, are we near an optimal entry? So all that means is, if I buy this stock right now, is it better than a 2-to-1 or 3-to-1 risk reward? So if I risk $1, will I make at least 2 or 3? So we're kind of justifying, if I accept the risk, the profit potential is worth it. The problem or the lack of knowledge that a lot of people have is they take way too many trades that are 1-to-1 risk. So in other words, you're risking $1 to make $1, and that's not really a great investment. That's not really a great deal. You want to find deals that are not only stacked in your favor, but also have good reward potential. There's plenty of ideas that are skyrocketing, but they're too far from the optimal entry, which means that if you buy that, at best, you're going to be looking at making $1 at best to risk $1. And we don't want to do that. We want to find that optimal entry. So these are the ideas we're going to be looking at right now. So if we take a little bit deeper dive into the basic material stocks, we're going to work our way through and look at whether or not there's room to go, look at whether or not it's extended or if it's just breaking out. So I want to give you some ideas now. Everybody here can work these pretty simply themselves. Now, a big part of this, and again, what's kind of fun about this is when you learn to go on this kind of a treasure hunt, you'll be shocked at the difference between everything looks overwhelming versus I know what I'm looking for. So it's either there or it's not. Now, the problem that a lot of traders have is they know what they're looking for, but they trade anyway if it's not there. You want to discipline yourself to say, okay, I'm looking for that, but I don't see it. And then, just take a step back, have a coffee, and don't put trades on if it doesn't meet the criteria. But what's kind of fun about this, and we're actually seeing this now in just 2 stocks, is we know that we went to the hotter sector and we're seeing a lot of same stocks light up, which is kind of fun because now that means order flow is being stacked in that group of stocks and that sector. So if the smart money has attention on those stocks, that means we should start paying attention because they're pushing those stocks and we're just going to look for optimal entries in that direction. So I'm going to go through this list of stocks and you can make some determinations, which ideas match your resources, your goals, your risk tolerance, your account size, all of those kind of things. So even if you have a small account size, there's plenty of ideas in here. Like again, FCX, this is a $30 stock. And you can see since earnings, higher lows. So again, they're holding the bid. They're paying higher prices consistently. So we're going to keep going through the list. Alcoa, we called this one out last week. Alcoa since earnings. This is not guessing. This is just paying attention. The whole group of stocks are all doing the same thing. And you can see the profit potential between where it is now and where it is. So this is where you set up the trade ideas. NUE also breaking out. CF also breaking out. Now, this is an important one to talk about in CF because I want to really I want to make this point. I want to really drive this home for you right now. We just looked at a bunch of ideas in the sector and in individual groups that are just starting to break out and have room to go. This stock that we're looking at right now, CF, this is where a lot of traders get tripped up. It's obvious, it's moving, it looks fantastic, but it's too late for a new swing trade. That's where people get messed up. You chase it, you missed it, you have fear of missing out, you buy it too late, pulls back, you get stopped out, does exactly what you thought because you didn't have the timing down, which is something we're going to talk about from our coaching call. So when we look at this stock right now and look at what the stock normally does, if we take a look at the most recent moves, even just the last 2 moves, 83 to, let's say, 97, roughly $14. And if we take this 94 to 106, roughly $12. This move here, 101 to 117 and change, is $17. So this stock has already gone what it normally does. So this is, again, I hope this is really lighting it up for you, because this is what it means optimal entry. If you're about to hit that buy button, and again, it doesn't matter if you're day trading stocks or swing trading stocks, you still need to know what it normally does. Now, we don't want to put limits on profit potential, but we do want to buy at the right time. That's critically important. In this case here, CF meets all the criteria. It's actually breaking out to new levels, right? Look at that. That's absolutely fantastic. But it's already at the end of a $17 rally. So what we call these stocks, we call them a bullish echo. So a bullish echo means it's super obvious, and maybe we can get one more day, but we're not going to put on a new swing trade until it pauses and resets the risk reward in this obvious group. So you can see how loud I'm getting. Like, I hope we get loud. This is the part of the treasure hunt in trading that is the most exciting part, which is when you know what you're looking for. Then when you go to look at the charts and do your scans, you're only looking for what you want to see instead of looking for everything, which just confuses the heck out of so many people. Only look for certain things, and it takes all of the confusion out of the stock market. So this is a really good example, and we're breaking that down as well, where it's obvious but extended, which actually brings me to the next thing. So we want to take a deep dive now into two things. We want to first talk about the Bitcoin mining stocks and the news that just came out, and see if there's some ideas over there as well. So let's get Jerome Powell off the screen here, and let's hop on over here and closely watch Bitcoin metric flashing a buy signal that has historically led to big gains, right? So historically led, all right? So what it's called here is the hash rate. The hash rate is essentially Bitcoin mining, activity of Bitcoin mining. Pretty interesting, right? So now that's a catalyst. That's a reason to at least look at the order flow in the Bitcoin mining stocks. So the top ones that I normally look at are Marathon, Riot, and Hut was just posted in there as well. So we're going to take a look at those on the weekly charts and determine if there's order flow that could be a catalyst based on this news story. Now, again, a catalyst is a reason to look at it. We can go back to NVIDIA yesterday that lowered expectations. They beat the lowered expectations and the stock rocketed. We're going to watch it today, but it's not going to be a longer term play because, quite frankly, beating lowered expectations, that's not exactly a goal. If I say I want to lose 20 pounds and then I'm saying, well, I only want to lose 5 pounds instead because I can't lose 20, and I lose 5, that's not exactly awesome when my real goal was to lose 20. So we're going to take a look at these Bitcoin mining stocks that I trade. Maybe you might want to decide to trade them for yourself. Whether or not the story is good for you to hop in. It's pretty interesting. I'm going to put this link in here. Everybody can take a look at that right there. And then we're going to take a look at the actual stocks that I typically trade. So in this group, Mara is one that I trade. So I want to go over to the weekly chart, and we're going to take a look at this. Now, you can see that we actually had a nice weekly run. Earnings came out, and now the weekly chart is pointing down. So what I want to get across here, again, remember what I said about 10 minutes ago, that when you are swing trading or looking for that little bit longer term move, again, versus day trading, we need to be trading on that weekly chart. We need to be paying attention to whether or not the weekly chart is telling us day after day and week by week, smart money is making more than just a one-day commitment. So yesterday in NVIDIA, we'll just go to NVIDIA really quickly because it's a big news story. We'll go to NVIDIA really quickly and look at the daily chart, and we'll even break that down. So again, for those of you that didn't know, NVIDIA had lowered guidance, lowered expectations, hovering around the 50-period moving average, actually was down here after hours yesterday, and then the market opened, and this is what it did yesterday morning, and it closed on the highs yesterday, just completely shocking anybody who was looking at the earnings. That was a catalyst, and we actually held this all-important 50-period moving average. If we shoot back over here and we take a look at this guy right here, as of right now, this was bullish. It was making higher highs. Smart money was paying higher highs. Now, this week is bearish. So I am not looking to be a buyer of these despite the news story. If I do it all, it will be a day trade. For me, for a weekly trade in one of these stocks, so Mara, Riot, and to a little bit lesser degree, I don't really trade Hut at all. And be honest with you, it's a $2 stock. I want to be clear about this. I don't trade penny stocks. I don't trade anything under $10 really. So for me, really, my main focus right now in the digital currency and crypto mining area for me personally is Riot and more specifically Mara, M-A-R-A. Those are the two. But I want to be clear because the weekly charts are red, which means that they are below the opening price for the week. So that's the opening price. And you can see we're below that. I'm not looking to do anything there until the weekly chart does one of two things. The weekly chart either turns green, so that means that the opening price on Monday, right now price is down here. I want to see the buying pressure at least get back up to that opening price. If that does not happen today, which probably not going to because it's all the way near the low of the week, that means next week I'm looking for two things. I am looking for Mara to be green next week and then go well bid, which means the price action takes out the high of this week. If those two things happen, then I plan to be involved in that as a longer term trade. So here's the difference between I read a news story and I have to get in versus I read a news story, that's interesting, but here's what I need to see before I get involved. And we just outlined what that looks like, which now takes me into yesterday's coaching call. So I want to give you a heads up on this. If you want, you can take a screenshot of this. These are the topics that we talked about last night. The biggest one that I want to talk about is getting comfortable or uncomfortable. Okay. First, right here. Okay. Why you should use uncomfortable share size and when to use uncomfortable share size. Now you can take a screenshot of this. There's a whole bunch of different stuff in here. We had some mindset stuff last night. I'm going to actually start on that one because it's critically important. What do you say to yourself after you get out of a trade that didn't make money? What do you say to yourself? What should be the number one? And actually, if you could do me a favor, type it in there. That'd be kind of interesting. What would be the first thing that you say to yourself? Well, what should be the first thing that you say to yourself after you exit a trade? And more specifically, what do you say to yourself after you exit a trade that does not make money? Now, we had a call yesterday in our coaching call. One of our members, Aaron, mentioned two trades that we reviewed yesterday, and he said they were failed trades. Then we went and reviewed both of the trades, and both of the trades were fantastic. They were good ideas from start to finish. There were multiple stacked order flow, multiple reasons to get in. Trades did exactly what he thought, and then they came right back down and didn't go in the direction that he was looking for. So he said they were failed trades. They're not failed trades. You need to get this mindset shift because it will change everything for you. The very first thing that you should learn to say to yourself after, I'm smiling because I'm getting excited about these topics. I want to say this properly so you can write this down. Okay, I'm going to say it right now. That was a good idea. It just didn't follow through. Write that down. It was a good idea. It didn't follow through. Not only are you putting the responsibility of the trade on your shoulders, you can't say a trade that did not go in the direction you planned was a failed trade or a bad trade if it was a perfect setup. So I want you to say that to yourself as soon as you get out of a trade, if it doesn't make money, was a good idea, just didn't follow through. If you really want to elevate the way you think, you would say to yourself, I'd take that trade 1,000 times. That particular trade did not follow through. Such a critical part of understanding the mindset of trading. Now, the other part that I want to get is kind of the opposite of that, is this stuff over here that we talked about, which is uncomfortable share size, okay? I've spent a lot of time recently, and I want to see if I could find it. I hope I could find it. I apologize. I didn't pull it up a little bit earlier. It's a very important thing. I want to get into the trade. Okay, perfect. Here it is. So I want to bring this in, and I want to talk about the reality of trading, okay? A lot of people believe that when you're trading, that you're just like, oh, I never make a mistake. Everything works out perfectly. Here's the reality of trading. And this is going back to what we just talked about with uncomfortable share size, okay? Every trade is not the same. The fact of the matter is some trades have order flow, reading the tape is perfect, and you're near the optimal entry, and you have plenty of profit potential. And some other trades are like, okay, I could take that trade. I could justify it, but it's not perfect, right? When you understand how to read the market, how to read the sector, how to stack that order flow, how to get in there at the right moment where everything is lining up. The market internals, the VIX, the ticks, the advanced decline line, sector rotation, everything looks fantastic. You need to make money. You need to get uncomfortable because it's a better deal. Do you understand when you're looking at the market, when you're looking at the stock market, can you differentiate between this is awesome? And you'll hear me say this in our Discord community. I'll joke around a little bit now. Everybody belly up to the bar. There's something to do right now. And I'll tell everybody, turn off your cell phone. Right now, everything is lining up. But here's the interesting thing. When you recognize that, one trade can make all of the difference. And I'm going to blow your mind on something right now, and I'm going to shatter the belief about what you probably think about real trading right now. And this is, you're going to go behind the scenes now, all right? So this is something that I posted just a couple of days ago, and one of the biggest challenges that we have in the community, especially for new members, is believing that every trade needs to make money, and they're doing something wrong if every trade doesn't need to make money. Got to be honest with you. All I care about is my account going up? I could give I could care less about what my win-loss percentage is. So I want to show you this again one more time, and I want to really bring this home. This is a couple of days ago when the market was trading. It was a very, very tough morning, and I wanted to let everybody in the community know, give them context. I traded 6 stocks this morning, 5 losers, 1 winner, and I was break even on the morning. Now, why did I tell that to everybody? First, I want everybody to acknowledge, and I want to tell them, especially the new members of the community who don't have the experience, yeah, that was a really tough morning, but there was still some ideas that met the criteria, and we took the trades. So I took 6 trades that morning. Let's take this back to getting uncomfortable and recognizing good ideas. There was one opportunity that day where everything lined up, and I went in with bigger, uncomfortable share size because it was perfect. It worked. That one individual stock-specific idea was good. So I lost money on 5 out of 6 ideas. Now, again, go back to the question I just said. Would I take that trade again? Yes, I would take all 6 trades 100 times in a row. It was a good idea that didn't follow through. Our job is to set up the trade. If the order flow doesn't follow through in that moment on that entry, that's a part of trading. But there was one trade that was a better deal, a better opportunity where everything was like, yeah, let's go. That sector, that group, those stocks lighting up, and I got more share size. That one trade more than offset all of the other trades. So especially if you're day trading stocks, you need to know this. A tough morning, I got right back to basically break even, and now had the rest of the day on a tough morning where I wasn't down money because I recognized the situation, kept my risk down, could care less about the fact that those 5 trades didn't follow through. All I cared about is I stepped up on that one trade, and now the morning's over, a super tough morning, and now I was at break even waiting to make money the rest of the day instead of digging myself a hole because I preserved capital on the trades that didn't follow through. And the one trade that was good, I got uncomfortable, sized up, and made it back. Look, some of you know me personally, some of you don't. I live in the real world, okay? This is trading in the real world, okay? I just can't get this across enough. And this is the kind of context that you're going to get if you happen to be in my community, if you're in our Discord community. This is the stuff you get from me. I am going, as much as I will tell you that it was a tough morning, and I want to make sure you understand. So you don't, like, let's say Tony is an example, all right? Let's say Tony's trading that morning, and he's trading from home, and maybe a whole bunch of other people. David, maybe trading at home by yourself, right? You don't know sometimes if it was a great morning or a tough morning. But if I'm telling you it was a tough morning and you still feel like you traded well, you're going to feel a little better about yourself because you're like, okay, it's not me. I'm not crazy. I didn't forget how to trade yesterday. But we got to go to the opposite side of that, which kind of takes us back into that coaching call again. I want to just pull that up again. Is again this: when you should use uncomfortable share size, when you understand when there's more available on the table. The same way that I will tell our community that was a really tough morning. Let's scale back our size. That's the right thing to do right now. PPC, preserve precious capital. When you recognize that and do not dig yourself a hole and trade simply because the market's open or simply because you have a trading account and trade for excitement, when you stop that, you're preserving your capital, you're preserving your sanity, so that when you get a morning like we had yesterday, the first hour and the last hour of the day were amazing. Now you're in position to net money as opposed to digging yourself out of a hole. And that's the difference between chart reading and trading. They are not the same skill. So the same way I just mentioned that morning, sometimes the mornings are tough. Yesterday, we did the opposite. And then John Bates is here. Yesterday, I was like, belly up to the bar, everybody. There's a lot to do right now. And that's what we do when the market's open, so that you understand now it's a time to drive 75, get a little bit extra share size, and hold those trades a little bit longer, versus that stop and go traffic when the market's a little bit tough. You're preserving capital. You're staying safe until the market and the road opens up again. I could talk about this all day. I can't right now. I got to get ready for my other call. I hope this really helps you. Please watch this video again, because we talked about some pretty life-changing stuff in the market. If you're a little bit frustrated right now, watch this again. Share it with your friends. If you know anybody who's trading stocks, I'd really appreciate it. And if you have any further comments about what we're talking about right now, leave those comments below the video, and I promise to get back to you as soon as possible. If I did a good job today, please do me a favor. Make sure you give me a thumbs up, and make sure you subscribe, because we have new content coming out soon. Have an awesome day, everybody. Jerome Powell at 10 o'clock today. Be aware of that. Have an awesome weekend, too. Thanks so much for joining me. I really appreciate it.